Yo, yo. Welcome back to another CMT Lunch Hour. I will be your host today, resident CMT Larry Thompson. And yeah, let's blast through it, right? Let's kind of get through the charts today, right? St. Patty's weekend coming up. We're starting off with a little green, huh? So great to see in the markets. Great to see a relief bounce, maybe a dead cat bounce, right? Who knows? Not me, right? But I know how to manage risk, which we'll get into today, right? Know how to spot trends, trend changes, study market participants, those types of things, which ultimately is how you end up making money. You don't make money predicting the future. You make money managing risk over longer periods of time with edge, right? And we'll get into that today. First thing we'll do is go through the S&P 500, NASDAQ 100. Just do a review of that. Also, just go over the market carpet for today, right? Just kind of review what's taking place this week, what's taking place today. We'll kind of talk through taking a deep breath, right? I think that's something people need to do in this type of a market. Are momentum names bottoming, right? Names like Palantir, names like AppLovin, names like Dutch Bros, OKTA, right? Are some of these momentum names bottoming? We'll take a look at that. Of course, shout out to the chat, already ripping through some tickers here. Send over the tickers, right? Blast the chat in the link. Send over some tickers. We'll run through those. I'll run through all of them before we leave here. And then lastly, we'll look at some of my favorite setups, right? So let's get started here, right? Let's kind of dive in, take a look at what's taking place in the market. So we'll just start here with the market carpet. Here we go. All right, guys, taking a look here at the market carpets. Okay, so what this does here, this feature is just showing you the darker the red, right? You can see the legend down here. The darker the red, the bigger the move today, right? The darker the, and the darker the green, the bigger the move today, right? So the darker colors are the larger moves, the lighter colors are the smaller moves. Green is positive, red is negative. You get it. What I want to show you guys here is, right, breadth today, right? That's the first thing I want to look for when I see the market up when it's been down is, okay, is there broad participation? Because bottoms typically come with broad participation. So this is one day, right? We'll kind of get into some stats behind that in a minute. This is 1 day performance, right? This is, what is it? Noon, right? So it's half a day performance. We want to see that continue, right? We want to see this continue for more than just a day. Thing I want to highlight here is this is the 1 day change. Let's look at the 5-day change, right? This is the past 5 days in the market, okay? So this is where you have to put things in context of what's occurred. This isn't a week. This is also going back to last Friday. So you have to put things in context of the environment we're in, and it's a messy one, right? It's a downtrend short term, right? We can see that by this. You can even go to the 1 month, a lot of red, right? You've seen energy hold up okay. You've actually seen a lot of defensive areas hold up okay. So we've seen some defensive rotation the past couple of months. We've seen the market kind of get kicked in the face, right? Especially the Mag-7, which we'll get through all 7 of the Mag-7 today, and an ETF that equally weights them all, because as a CMT, I love charts, right? Got to rip through the charts, get the information from the charts. But overall, right, this is a start of a move, right? This is the start. This is how they start, right? But we need follow through. So let me just dive in here. We'll look at a couple charts, and then I'll go over kind of my lesson of the day. We'll do some shorter term. So let me zoom out, right? You always start with the zoomed out picture, and then you kind of zoom in. So we'll do that here. All right, so this is what we're looking at here. You've seen these risk management levels week after week because I draw my levels in advance, because you got to know what you're doing in advance, right? You don't come up with football plays on the spot, right? It's the same thing here, right? You practice the plays in advance, so you're aware of those scenarios as they play out. So then we can have the odds in our favor and understand what's happening in the market. So S&P 500 here, it's messy, right? It's ugly. This downtrend we see here has been strong, right? It's been strong. I think one of the interesting things is that it was easy when we were making this all-time high, say we're back at all-time highs. What are people nervous about? But I think we were sharing this chart for a while that it was still just a sideways mess. And from sideways came resolution to the downside, right? Now we're below the 200-day, and risk management is paramount. We had that 580 level. I took off a lot of risk at 580, right? We have this 560 level that it looks like we might be testing, but we're below this 200-day, right? We haven't seen that in a while. We haven't been below that 200-day in a while. So we're going to see if this follow through can occur. And if we can get back above that 200-day, is that become, right, support? But until then, it's just probably just going to be messy, right? It's just probably going to be messy. What I mentioned earlier about that broad participation, looking at the market carpet. Chat, I see you guys posting tickers. Shout out to the chat. I'll run through them all here in a bit. Shout out Zilberg. Shout out Ray. Shout out BK making money. Are we making money at Burger King? Oh, BM making money. Okay. Thought we making money at Burger King. I thought they made Whoppers, not money, but I get it. Trying to make a cheese? Okay. I see the chat. Chat's popping. So chat, just keep it coming. Keep it coming, right? Let's just keep it coming. I'll get through all those charts, I promise. I want you guys to see some of this stuff first. I think this is important context. So top panel, S&P, same chart as this, right? Same levels. But what we have in the bottom pan is breadth, right? That's the number of stocks. That's what's occurring underneath the surface. And you can see here that there's typically two things that come with a bottoming process, right? One is sentiment getting terrible, which a lot of people I know that work in the markets will have their aunts, their uncles calling them, right? People at the gym just randomly talking to you because they know you work in the markets. It's when you start to see that fear, when people start to blame the presidents and things like that, which I don't know if it's the president's fault, right? We really don't know, but people start making those excuses, right? When the bear case really starts to make sense, right? When your aunt can explain it to you perfectly, who might be a, right, salesperson for some tech company, right? But not necessarily involved in the markets. That's step one, right? So seeing all that sentiment. The thing that pays us though is price. So when you look at this chart, what you see is you see a lot of fake outs when stocks bottom because you see a violent resurgence in price action. And what that normally comes with is broad participation. So this bottom panel here is this S&P 500% above a 20-day. And you can see, as I'm kind of highlighting here, you'll see we kind of get to this 30 level. It's once we get back above that, that the rally can start to really occur. So we have some recipes here, right? You saw this fake out, right, in October. You saw one, right, at the start of the year, right? We had this downside follow through, which if you were smart, you might have gotten out around the 580 level based on some other analysis. Now, right, we're below this we're getting right back above this 560 level, but will this be a fake out? So what I want to wait for here is another day, right? I want to see this happen more than once. And that's something I want to talk about here, right? So had some friends run some data for me. And if you look at the S&P 500 here, S&P 500, right? We need to see follow through because we're currently in a sell the rip tape, right? We haven't had back-to-back green days in the S&P 500 since February 19th. That's 15 trading days ago. That's 3 weeks of trading, right? 5 days a week of trading times 3, 15. Math, right? Math in the chat. Shout out to math. So one thing I just want to highlight here is you don't see these in strong uptrends, right? You tend to see these when the market is pulling back. And it's not much of an indicator or a signal. It just shows you that the market is weak. The tape is weak at the moment. And that's all I wanted to highlight with this is that the tape was weak. And so when you see a bounce, you don't need to run into it because we know it's a weaker market from a shorter term perspective. So what we want to see is this follow through, right? So this is a month and a half roughly of price action on this chart, right? And I'm using the 65-minute candles, 65 minutes, right? 6 in a day. So then you apply the 30-day moving average. Sounds complicated, but it's really not, right? 5 times 6 equals 30. I'm essentially creating a 5-day moving average on a shorter time frame because the market is fractal. If you're not familiar with the fractal nature of the market, all I'm saying is this chart here, this 1 month price action is represented in this chart with this 1 month, right? It's just a zoomed in feature of the fractal nature of the market, right? It's like those little Russian dolls, right? It's like peeling an onion. Right? So the fractal nature of the market. And so what we're seeing here is we're starting to see we're getting back above this synthetic 5-day moving average. Okay, now do it again, right? Anyone can hit the golf ball good once, do it again, right? So do it again. Show me, keep showing me this. And then you might have a tradable bottom, right? Trade it against that 560 level maybe. Maybe wait till we get back to 580, but that might be resistance. But I want to see back-to-back green days. I want to see price actually kind of move in the right direction. before I just kind of load the ship here, right? Same thing with the Qs, similar price action. It's a sell the rip, sell the rip, sell the rip market. And then, okay, today we're starting to see something, right? Everyone's getting bulled up for St. Patrick's Day. This is the start, but we need to see that follow through, right? Just like for this topping pattern, breaking here was a start, but then what did we get? We got follow through, and that's confirmation. And then when we got close to it, we saw more follow through. So we want to see literally the exact opposite happen on this chart, and then manage risk against these risk levels, right? Against this 560, 580 range, right? That's kind of how we want to manage risk against, and however you guys do it. So that's kind of an overview of the structure. Need to continue to see that follow through. And the next thing I wanted to talk about was one of my favorite quotes from one of my biggest mentors in the market from afar, right? I don't know Ned Davis personally, but he has a famous book called Making Money or Being Right, right? So Being Right or Making Money, very famous book. Chat, I recommend you give this book a read. Being Right or Making Money by Ned Davis. Chat, let me know if you've read that book, and keep sending the tickers. Like I said, I'll get to them here in a bit. But we're in the business of making mistakes. Winners make small mistakes, losers make big mistakes, right? So if we're in the business of making mistakes, right, and if winners make small mistakes, how do we make small mistakes? We make small mistakes by managing risk. And that is the importance, and I think the golden arrow of technical analysis is it gives you key levels to manage risk against. It gives you poker hands that allow you to, when you do make mistakes, make small mistakes and not hold losses forever, but hold on to winners to where you can create an edge over time. That's the beauty, right? And so people are going to make mistakes. I'm going to make mistakes, but is that mistake small? Are you managing risk so then you can swing the bat again and again and again? So take a deep breath. You don't have to be trading this market. You don't have to be trying to tactically call a bottom. You can just wait, right? Maybe wait till we get back above the 200 day. Wait until we get back to above 580. Wait until we get back to all-time highs if that's your process. But understand you just need to make small mistakes. And that's where panic selling is not the plan, right? That's where managing risk and understanding that, hey, we've kind of corrected a decent amount. I should probably wait to not just panic sell, or I should have levels to where I'm managing risk against, right? Which we have some levels here. Will this potentially, could you have sold at this level and then this market rips against you? Yes. But what should you have also done? Got back in. Which what would have that done? That would have managed your risk, right? Because you would have lost 2% and then got back in. But it's when you sell and then you get stubborn and then you don't get back in when your signal flashes because you're worried about something that's not related to your process that you make a big mistake. So just a great quote, chat, right? Stick to small mistakes because you're going to make them. Don't try to be perfect. Anyone who has this perfect win rate, this perfect percentage rate, just ignore it. It's not how the market works. Everyone makes mistakes, and just keep swinging the bat. So that's what I wanted to just kind of highlight today, because it's a mistake business. You got to understand these risk levels, got to understand how you want to manage your positioning, right? Same thing with this chart, right? Sell the rip. Okay. Well, now if we get back above this key moving average, maybe that's what you go long against. But if we get back below it, you get out. Small risk, right? 1-2% of your account, right? So to some point you can get chopped up, but you need to get in to then get that move to the upside. So that's kind of what I wanted to highlight, chat. Next thing I wanted to talk about was momentum names, right? So are momentum names like Palantir and AppLovin and other names like that starting to bottom? So let's kind of take a look at those couple charts, and then we'll get to the tickers. Keep sending the tickers. I promise you I'll get to them, right? I see this first one, ASTS. I'll get to it. I promise. So chat, just keep it going. Chat, what are you guys buying today, right? Do you guys think this is an actual bottoming process, or you think this is going to roll back over? I'm curious what your guys' thoughts are. Curious what the sentiment is. I see a lot of bulls in the chat. See a lot of bulls in the chat. I dig it. All right, let's kind of start with some of these other charts. Okay. Let's look at Palantir first. All right, let me zoom in here, right? I'm zoomed out. You guys are going to need your binoculars for this chart. So zooming out on Palantir, guys, right? We kind of see a big base breakout, which we've talked about over and over again, so I won't highlight that. But what you see here is we're starting, right? Start with the zoomed out chart because the market is fractal, as we've talked about, right? You're seeing potential. You're seeing potential for a bottom here, right? Around this $80 area. So long-term chart, strong uptrend. What did we have? We had a strong pullback, right? A lot of people probably got killed during this pullback, right? 36% pullback in this name. So let's kind of zoom in and see if we're setting up for the potential to kind of rally higher. So zooming into the daily chart, you can kind of see, right, that same level because of that fractal nature of the market, right? This $80 level here, right? We undercut it. That's what, like I said, that's what bottoms tend to do. They tend to undercut these moves. There's certain ways to get around it. One of the ways is just be willing to get back in, be okay with making mistakes. Actually kind of look like the look of this. So you can see here that on the RSI, let me make that a little bit better for you guys, right? You can see here, the RSI, this is where the bulls have stepped back in again and started buying this stock, was against this RSI 40 level. You see that chat here, right? At the start of the year, and then kind of now we're doing this bottoming process. So that's, against 80 would be your risk level, right? Because if you lose, it's a small loss. But honestly, if you want to swing the battle in Palantir, I think you got a decent risk reward here going against that $80 mark, right? If that's kind of how you like to trade the market. So next thing we'll do here, let's just fiddle with this math. So it's currently at 85.65, right? We'll say, okay, so you're risking 5.5% to the downside with this move, right? You're risking $5, right? And then maybe it has potential to go back to all-time highs, right? Or maybe it has potential to get to 100, which would be 17% upside, right? That's a 3-to-1 risk-reward ratio. That's putting the poker hand in your favor. Maybe swing the bat if that's something you're into. Last thing I'll take a look at here is just zooming into the shorter term chart. This is 10 days. Let me buff it out just a touch. Let's just do a month. Right? Using that synthetic 5-day moving average, we got above it. You can see there might start to be some resistance in this chart here, but you can see the start of a bottoming process. So I don't think now's the time to necessarily sell. You probably should have sold earlier, but if you're looking, right, to get these pullbacks, this is a name I don't hate. I don't hate this style. AppLovin, I'm not going to actually talk about. I'm not going to talk about AppLovin as much. I will share the chart, but I don't have an opinion on it for reasons can't really talk about. So here we go. I would rather own Palantir, right? But 225, 230 is that level you're managing risk against in a name like this, right? That's how you're keeping that loss small, right? Still 20%. So I like the risk reward more in Palantir. So those are two momentum names I was kind of taking a look at. Chat, I kind of want to see, what are you guys buying? I see Hood in the comments, SMCI in the comments, Rivian in the comments. I'll get to those charts. So I'm curious about these momentum names, right? I think one of the things that can occur with momentum names is short sellers, right? People can get short positions and then they're squeezed out of those positions. So that can tend to happen with a lot of these names that have short interest. And one of the ways I do that is actually, I'll show you guys here. Right. So let me show you guys one little tool I use relating to short interest. All right, so shout out Koifin. Just want to share something really quickly with you guys. So I have short interest, right, in this column, 31% short interest, and then this is 1-day price change, right? You see this 1-day price change column, you see short interest. This is how you can tell. Look, a lot of the shorts are green today, right? A lot of these stocks with high short interest are green today. That's short cover rally, right? So how do you position for that in advance? Maybe in those charts you were looking at, when you start to see these positionings, right? You then manage risk and you're like, okay, we're going to get this pop. But that's why those pops need follow through, as we talked about, because short covering rallying might last a day, but we want to see it last a couple of days, right? We want to see us hit the golf ball a couple of times. We got to actually catch a couple of passes, right? We got to run the ball 5 yards more than once to get a first down, right? It's the same thing here. So that's why I think a lot of this might be some short covering. And so that's why I'm so interested in seeing the fact that I want to see follow through in the market. So that's something I want to look for because, right, a day is a day. So, all right, chat, let me get to some tickers and then I will share some of my favorite setups that I'm kind of seeing in the market. So let's kind of rip through some tickers here. I see the chart requests coming through. They're pretty hot. So, all right, we'll start with ASTS, right? Actually, this is one that comes up a lot. Let me just, chat, I'm going to do something fun real quick. I'm actually just going to pull up the most recent one we've edited and just see how those edits have looked. Right. Okay. All right. So this is the last time we edited ASTS a couple weeks ago. Right. Highlighted that 17 area, and that's kind of the level you wanted to manage risk against. So well done. Right. So that was kind of the level to manage risk against. You can see here, right? This is a daily chart. Kind of see this trend line forming. Right, kind of broke this short-term uptrend, but this is a volatile stock, so I wouldn't get hung up on this, right, diagonal trend line. I'm not too concerned with it, but that's kind of a level. Some people like to use diagonals. Thing I'm noticing here is that, right, we want to look at this RSI level here, right? Look at RSI, and we want to see RSI kind of stay above 40, and that's what we're seeing. Right, during this downtrend, right, this downtrend we have here on the chart, you kind of see how RSI stayed below 50, right? It kind of got rejected, right? This is the bears were owning the momentum. Bears own the momentum in the stock, right? But then you see here, right, RSI is doing the opposite, right? 50 is becoming support. So I think if you're in this name, you're okay, right? Looking at this daily chart, I wouldn't panic here, right? A lot of relative strength relative to the broader market. It's been one of those momentum names that's held up well. And so, yeah, I like the structure of this. Let's kind of zoom into the daily, or zoom in a little bit shorter term, right? So kind of fighting a little shorter term downtrend here. But I think against that 25 level, you have pretty good risk against it. So ASTS, not a bad one, chat. That's a W from the chat. That's a W from the chat. The second ticker here is Bros. Bros is one of my setups I'll share later. So stick around. Hondo We. I'll be sharing that one in a bit. RNMBY. That sounds like a penny stock, but let's check it out. RNMBY. Oh no, I said a penny stock. Look at this thing. Pink sheet. Red until metal. Woo! $294. Why are you putting this in the chat? What advice do you want from me? Like, what advice do you want me to give you on a stock like this? Right? Not that this is financial advice, but what analysis can I give you? Right? Set a trailing stop. There you go. There's my analysis. Set a trailing stop. I don't know what else to tell you with this name. TRNR. Let's get to that one. $1.30 stock. Right, chat? These aren't what. This isn't what we're looking for here. This is not what we're looking for here. Right? What we doing? What we doing, chat? Chat's off to a rough start. Rough chart from the chat. Come on, give me some tickers that are cranking, chat. This is not what we want to see here. QBTS, are you going to save us making money? BM making money, you going to save us? Ooh, 83% this week. I think we've talked about this one before. Let me take a quick look. QBTS, good looking chart, right? But let me see. I think I have this one already marked up. Yeah, I already got this one marked up. Here we go. QBTS. All right, chat. So this is my marked up from last time we talked, right? As you can see, did not like the triangle here, right? We're waiting for a break of this triangle in a certain direction, and it kind of resolved higher initially and then faded, right? So just a little messy there. But now, let me take some of this. Let me take some of this noise off the chart. We don't need all these moving averages on this chart. Don't hate the structure, right? I don't know what to tell you. A stock's up 37% today. Making money. I assume you're making money. Good name, right? I don't know what to do, right? It might have some overhead supply at 10, but I mean, I don't know what to tell you, right? Like, what do you want me to tell you about a stock that's up 34% today? I missed the move, right? That's the truth. We missed it. But hopefully you made money on it, right? But yeah, I don't see any edge here. This is not my type of edge here. Zooming out, yeah, 81% on the week, right? Did this have a large short float? Right? Is this a lot of covering? Is this a lot of covering, chat? Right? Was this name? Is this one of those names that had a huge short float? Let's take a quick look at the short float. Yeah, 15% short interest. So shorts got squeezed, as you can see. So probably short covering. Let's kind of see what happens next week when some of that short covering information comes out. But all right, opinion on rigidity or superior quantum CPU stock in your opinion. RGTI. You guys like these quantum names, right? I think this is all some short cover rallying. But I also do think some of these setups are clean, right? So this chart here doesn't look bad, right? When we zoom out, we see those bases that we like to talk about, right? Some fundamental shift in this company, right? The AI boom, right? That's what changed this company, right? When people started to care about it, they were searching for companies like these ones. So kind of see here that we have this base and then $9 area. It's where I would manage risk against. Zoomed out chart, right? Base, breakout, retest, and then we want to see that follow through. Look at RSI up here, right? See how RSI is staying above 50? We like to see that in these types of setups. Let's zoom in. Take a look at the daily. So this is the 50-day moving average, this light blue line. And so we'll kind of see. I'm not like hung up on moving averages, but I think, right, against that $9 level, when we zoomed in, that was kind of the level I would manage risk against. But we're starting to see a turnaround here. Still, it's just this isn't what I trade. This isn't necessarily the cleanest setup in the world for kind of my time frame. If you zoom in, shorter term chart, right, you kind of saw the base breakout this morning, but I wouldn't chase here. But yeah, longer term, right? Maybe wait for that pullback back to that $9 area, and that's where you kind of manage risk again. So chat's firing up now. I see the tickers running. You guys are getting after it. Good stuff. I'll keep sharing some charts. HYLN coming from Trying to Make Cheese. Shout out. Shout out to Trying to Make Some Cheese. All right. Helion Holdings Company. HLNY. Let's take a look at what they do real quick. Let's take a quick peek at what they do. Industrial Electric, $280 million company, sustainable electricity producing technology, flexible and efficient energy production. Okay. Okay. That's the space they play in. Chart wise, right? We kind of have a trend change that took place. Right? Don't have to overcomplicate it. Don't have to overcomplicate it. There you go. That was a trend change. We started having uptrends kind of try to unfold, but $280 million stock, stronger downtrend channel here. You know, not something, once again, not something I'm necessarily trading. Areas I want to manage risk against, though, has to be here, right? That's what we're looking for. Small mistakes, right, guys? So it's kind of how I would think about it. This would be my get out level, right? Get out, right? Get out. You kind of see we're bouncing there. So chat, you've probably heard me say this enough today, but I'll say it again, right? Follow through, right? That's what we want in a name like this. We want follow through. So let's zoom into the daily real quick. And yeah, this is just isn't something I would be trading. This isn't like, I don't trade these quick bounce moves. It's not kind of how my philosophy of money works. I will highlight, you can kind of see highlighting a lot of these RSI regimes. Who's in control of momentum? The bears, right? Bears are in control of momentum here. Need to see some follow through. So I get it. It's a messy market, right? A lot of these charts are going to stay messy. So I understand what you guys are doing, what you guys are looking at. So chat, I see Hood SMCI. I see Howard's in the chat. Shout out Howard. Can you go through brokers and home builders? I will do that. No problemo. But he's going to have to wait in line. Don't want to give him any special treatment. I'm just teasing. I'll get to his in a minute. All right, let's look at Super Microcomputer. Right, it's up 7% this week. We've looked at this chart a couple times. Let me chat. Let me get to that one real quick. Sorry to have it marked up. Right here, let me share this screen. Boop boop boop. Right, this is the daily chart. Right, so it's trying. Right, it's trying to do this bottoming process. It's just going to take time. Right, this is messy. Right, good for you if you caught the move. Right, you've doubled your money. That's awesome. But I think the initial move is the best one. But you're seeing higher lows. Right, higher lows in this chat. So shout out to the chat. I think this isn't a bad looking. If you want to play it longer term, right, you kind of see your pattern, right? 40, it could, right, go 50, 60% against the $65 level, but just shorter term, this is just messy, right? This isn't what I trade, but I mean, I don't see a reason to get out if you're in it right now, right? I think you're continuing to make higher lows, right? RSI is kind of flirting. You just want to see this kind of have some follow through. If you're managing risk, right, I think you would manage risk against that $40, $38 level, maybe not against last week's low of 38. So that's how I would look at it. But if you've been in that move, congrats, right? Hood, right, bouncing. We need follow through in these charts, guys, right? Just like Palantir, just like AppLovin, we need follow through. This one didn't get oversold, which is good to see, but we need follow through on the chart, right? Kind of zooming in. Right, because what can look like a bounce can quickly become a bear flag, right? Can quickly become this, right? Form this little triangle here. The triangle doesn't matter. It's just a consolidation. Don't get caught up in chart patterns, right? Right, because what we're trying to do is we're trying to use a language of price. That's all patterns are doing, right? It's just the language in which price we're speaking for price. So. All right, I want to see it get out of this. Get above 40. Get above 40 because this is what can easily happen, chat. Right? We don't want to see that. So, Hood, get above 40. I want to see follow through on that chat. That chart, chat. So, Hood above 40. We got to see some follow through here. We got to see follow through in that name. So, NBIS LTCN. I don't see a trade in this. Follow through. Follow through. Chat, we don't need to be trading messy charts. We don't need to be trading messy charts. Just sit on your hands and names like that. I want you to just sit on your hands, wait for some follow through. SQL. Okay, same thing, right? All these charts are similar, right? Strong pullback. Draw your risk level. However you want to manage risk. Right. And then, right, get some follow through. That's what we need to see in a lot of these names. What we need to see in a lot of these names. NVIDIA, I see NVIDIA. I'll go through all the Mag-7 once I get through some more of these. I see Rivian in the chat, right? You'll probably see the similar theme. I'm sure it, ooh, why are we messing with Rivian? Stay away. No advice here other than find other charts. Why would you want to own this, right? And if you want to own this, it's probably for fundamental reasons or you have a long-term view, but it's a long-term downtrend, right? Like I don't see a reason to be even looking at this chart, right? Set a 1 month high, like close a weekly up, right? Don't just, is it because it's a cool car? Right? A lot of companies make cool cars. I want money in my pocket. I don't want a cool car, right? I want money in my pocket to buy a cool car. Go buy the car if you like the car. The stock's shit. ADMA, respectfully, right? Respectfully, the stock shit. Shout out to that. But here we go, right? We're seeing a lot of these same patterns, right? This not a top look, but this, I actually like this one a lot. ADMA weekly. This is a W from the chat. I like this a lot. You have this fake breakdown. Ooh, this is pretty. This is the best chart we've looked at yet. I love this. Who posted this one? M Chromatic. Beautiful. Speaking my language today, guy. Speaking my language. Or girl. M Chromatic. Right? Chromosomes. Probably got some doctor in the office, which is sick. That not a top looking pattern. Oh, failed breakdown, right? And then look what we got, 3 weeks in a row up. That's called follow through. That's what we want to see in those other charts. Let's zoom into the daily, right? This gap, it didn't fill this gap. Had that fake breakdown. Fake breakdown, faked out a lot of people, and now we're seeing resolution to the upside. Good looking name. I think 15 is probably the level in that name. I mean, it's a decent amount of risk to manage, right? 17%. But if you're in a name like this, you're prepared for that, right? That's some risk management level that you understand. So good looking chart. Someone said they're buying NJR. Okay. NJR. Okay. New Jersey Resource Group. Not a bad looking chart. Zooming out. Look at this. Not bad, right? Not necessarily the most exciting thing here, but look, what do we got here? Higher lows, right? And we have some follow through. Okay. Right? I don't see on the shorter time frame, I don't see a ton to add to it, right? Like I think yeah, what do you have here, right? You have this little base, right? You kind of have this top level there, right? Against 48 bucks, but good looking chart, right? RSI continues to get stronger. Yeah, so just stay in it. You're buying this, I get it. Good looking one from the chat. Lunar, and then we'll get to home builders and brokers. Lunar, you need follow through, right, guys? We've seen this pattern over and over again. Strong uptrend, breakdown. This needs follow through, right? Why would you want to buy it today when, right, you don't have any confirmation of anything? Like all you really have is that short sellers are covering. You don't have proof that people want to buy it because they like it. You have proof people want to buy it because they were shorted, right? Which is great for an initial move, but like, this isn't like, this can easily resolve lower. I think, right, you manage risk against this gap, right? That's the gap you manage risk against. So I would want it to get above this level, right? Follow through. Chat, that's the word of the week, right? Phrase of the week, follow through. All right. Brokers and home builders. So let's just start with brokers, right? So similar pattern to these other charts, right? Strong uptrend, really quick pullback. We need to see follow through from a higher level, right? So let's kind of just zoom in here. And that's what you're going to see, right? You're going to see the chart pattern we've just seen over and over and over again, right? And what am I going to tell Howard? Follow through, right? But if you, right, I think in general, this is a great business, right? It reminds me a lot of insurance, right? Because it's just a matter of the activity that takes place, right? And people tend to use more options, right, as hedging when the market's ugly. But we had an oversold level, and then now we're bouncing today. So that happens. I think within this group, right, you have names, individual names that look good. Um, but I want to see follow through from this picture, and it just not seeing it yet, right? Doesn't mean it can't happen in a name like that. But the highest weightings in that name are Goldman Sachs, SPGI, Morgan Stanley, Schwab. But some of the individual brokers that are more specific do look good. So let me kind of look at a couple of those. So CBOE, for example, right? Zooming out to the weekly of CBOE, right? Good looking chart. But we need, right? I think you need to get back to all-time highs, like in something like this. I think you need to see that follow through. I would tell you, right, if you were following some of my work, I've been talking a lot about the chop in the market. And so I would say thinking this was going to break out when everything else wasn't, right? Stocks were failing to break out, which is why we're in a range. But we get back above this 213 level, 215 level, sorry. We look good, but you can see there's overhead supply. People are selling highs here, right? People aren't holding on to the highs here. This was a good looking chart a couple days ago. SPGI, another one in the space, and then I'll take a look at ICE too. SPGI, right? I like this setup in theory, right? Love this setup in theory, right? This is something I love to trade. I'll actually probably, great looking chart. Right. See this? Right. But we're kind of stuck in this range, right? It's mean reversion market here. So like the problem I have with any of these types of charts is the fact that it's nuanced, but the market as a whole is below its 200-day. The stocks above its 200-day are very slim, right? So my issue is until we see the market kind of turn back, I don't know if this is going to necessarily break out, but what we talked about earlier, right? You have very clean levels to manage risk against. This 485 level here. So when you zoom in, you'll see it on the chart, right? It looks terrifying when you look at it this way. Let's look at a different view real quick because that view makes it look terrifying. It's not that bad. There we go. Right. So you just have this range. So if you're a range trader, mean reversion guy, which Howard might be in some of his positioning, right? But longer term uptrend, there you go. Right? Against 475, right? You got 2 days of green in a row. What am I going to say, chat? Follow through. So we just want to see follow through in a name like that. Let's take a look at ICE. That's going to be the story. ICE is one of the better looking ones overall, right? It actually held its breakout, right? But similar chart pattern, right? Breakout, retest, and then follow through, right, guys? So this chart looks like a month in advance of what all those other charts people are asking me to look at look like, right? Do you get what I'm saying? Right? So a lot of the charts people are asking me to look at this week are right here. They're right here. Right? A lot of those charts, right? Breakout, pullback. What do we want to see? That follow through. So that's where you can kind of manage risk down here is to draw your risk level and then play your poker hand, right? And that was the trade here. And then now you have a new trade, right? You either put on a new trade or you add to your old position because you're adding to your winners. But in ICE, it's against this 170 level, right? You had that follow through and now we're back at all-time highs. And what happened? Buyers actually were willing to buy new highs, which is bullish. So ICE, probably the best looking one in the group, right? But ICE, best looking one in the group, but what did we just look at? It was SPGI, right? Maybe SPGI can do similar where it takes this level and then goes back to all-time highs, or CBOE, or even IAI as a whole, right? But I think you have clear levels to manage risk against if you do want to get long in these names. So, yep, the 200-day, right? Rate against the 200-day. So if you like these names, guys, you have really clean risk reward. But when they fail, just get out, right? Just get out. But really clean risk reward in a lot of those names. All right, home builders. So we'll take a look. Home construction, right? It actually has a lot more of the home builders in it than ITB has a lot more home builders in it than XHB. XHB is an interesting, but the largest holdings are Williams Sonoma, Johnson Controls, Masco, Home Depot, whereas the largest holdings in ITB are actual home builders, like the actual building of the home. So DHR Horton, Lennar, NVR, right? The actual people who build the homes. So let's start with ITB, right? So you have this topping pattern, right? Which we've talked about for weeks on the show. Kind of how I didn't think we would get persistent all-time highs in the S&P 500 if home builders weren't participating, right? I don't see how that could happen when such a cyclical, especially with semis, right? Semis and home builders going down, probably not. The market probably isn't just going to continue to randomly go up. So you have this topping looking pattern here. I don't see a reason to be cute and call it not a top and try to trade it, because reality is most of the tops are completing at this point, right? If tops weren't completing, the market couldn't be making new lows. That makes sense? So I think you're cute here. What I would say though, right, against this 95 level is set an alert, right? Set an alert on your systems that you guys have. And right, when we get back above that, if we kind of have this sweep below, which we see a lot of times in the market, what I mean by that is we have this false breakdown, right? You might start next week, we might get a gap down. And then once it gets back above this, right, say we gap down a little bit below 90, once we get back above it, then you can kind of put on that trade once you get a couple days of follow through. But I would say Howard's bringing up good charts that have potential to buy because you have little risk to the downside, right? You can manage risk really clearly to the downside. And if you're looking to add positions because you got out of the market early, that's what you should be doing. You should be looking for trades where you have very limited downside to where you know you can get back out if this is the top, right? So good looking charts. Send a W to the chat for Howard. I think these are interesting areas to be looking at as a whole, because they need to go up if we're right in a cyclical bull market. Sorry, right? If we're still in a bull market, home builders and semis and those cyclical names, I think still need to hold on, right? They don't need to necessarily outperform, but they need to hold on. So good stuff from the chat. Good stuff from the chat. MGNI. And then I'll run through the Mag-7 names. I don't see anything here, guys. Right, let's just get to the Mag-7 names. Actually, who am I? All right, zooming in, MGNI. Right, you know you have your risk, and I'm going to tell you the same thing I've said over and over again today, because I want to tell the truth, right? And sometimes to tell the truth, you have to say the same thing, right? Because I'm not trying to sell anything, I'm just trying to help. Sometimes helping someone is telling them to wait for follow through. So wait for follow through. We were oversold. Oversold bounces are normal in downtrends. So just wait, right? So just wait for some follow through here. That's the key message from today. And now let's rip through the Mag-7, because I know I see some bunch of people asking about the Mag-7 names. Let's take a look. All these charts are already marked up from the last couple of weeks. And you'll see my key levels, because one of the things I want for you guys to understand is that you should make edits to your charts, and then as the market kind of reacts, you can see, okay, did that level make sense? Was that important? And then you can kind of game plan, yeah, that was an important level. So for example, you look at this chart, last week we marked up this 240 level. I was like, if we're below 240, there's no reason to be in it. What happened? You got an 11% drawdown. I'm not a magician here. It's just when you look at enough charts, you get enough reps in, you can kind of see the levels you should manage risk against. And the level to manage risk against in Apple was 240. What do we have now? We have an oversold, just like everything else in the market, oversold bounce. So we'll see if we see some follow through, but we need to see follow through in a name like Apple. Looking at, we'll come to that one last, right? Taking a look at Meta, right? Same thing. You're starting to see a bounce here. I guess 600 could be a level here, right? Like you could add, if you think about it in Meta, add a level here in Meta, right? That's kind of the top of the trend, right? You guys will see it here. I'll show you. Kind of a fake out. But it's just like all these other charts we were talking through, right? Maybe not a bad time to swing the bat because you have really clean risk reward, right? Against 600, you have really clean risk reward. So you can take a stab here, right? I actually don't really hate this Meta against 600. Kind of like it. Why? Chat, why do I like this? Small mistakes. What are we risking against 600 bucks? We're risking 2, 3, 4%. Swing the bat. Swing the bat, right? I don't think Meta's going away, right? Currently in a 20% drawdown, finding support at prior resistance, 600 round number, right? We know how people psychology think about round numbers, chat. So Meta against 600, not a bad looking chart. Apple, we talked about. Amazon, Amazon struggle busting here, right? We want to see Amazon. Right? This is the level, right? And what's this level line up with? So it's Meta at 600 bucks. That's important. Amazon, it's 200 bucks. That is important because these round numbers, these financial advisors and these managers of money get these numbers in our head and they're like, hey, if it gets below 200, sell it, right? And they tell their traders and then their traders sell them. Hey, if it gets back above 200, buy it, right? And so that's where these levels become important because people are either trying to buy and sell at this level. So Amazon, let's get back above 200. That's the level here, right? A lot of oversold bounces below the 200 day. Don't trust them just yet. Get me back above that 200 day. Let me see that follow through. We get back above 200, you got to be long Amazon. Broadcom, look, chat, Broadcom's doing what we want these other charts to do, right? Fake this little hook, right? This little fake breakdown, right? Fake breakdown, bear trap, some may call it. And then we've recovered, right? It's up 5, 6% since then, but you had clean risk reward against 185. That's what we want to see here, right? It's literally the same chart. Literally the same chart, right? Berkshire, beautiful, right? Nothing really to say. This was kind of the time to get in. Berkshire is when it broke out of this range here and looks to be continuing to resolve higher. He has a great way to get people interested when the market pulls back. Google, right? This is kind of an ugly looking chart, but bear with me for a sec. Google, I think down here is kind of the level, right? It's a little messy, but it's kind of the area, right? You can maybe swing the bat as we start to see some follow through in some of these names, but we need that follow through. And then we'll look at mags, right? So this is an ETF that holds all of these roughly equally weighted. 50 is my level in this. So I don't see a reason to be in it wholeheartedly until we kind of get above 50. If you want to swing the bat down here, feel free. I mean, it's oversold, but not for me. I'll pay an extra 5-6% to get back above 50 in the whole entire ETF. And as a whole, the market needs a name like this, right? So we need to see this improve. Meta, we talked about. Microsoft, it's a mess still, but good day here, right? Good day for Microsoft. But yeah, it's just a choppy range, not something I'm messing with. And NVIDIA, saw this one in the chat. So NVIDIA, right, kind of undercut its lows and then it's rebounding here. You've seen some days of follow through, but I don't see a trade. Like where am I getting in this name? I don't see a trade. We might start to run into some trouble against the 200 day. It might start to look like Microsoft, right? It might just start to be messy around the 200 day. Don't see a trade in NVIDIA, right? Maybe if you're a long-term investor, Sure, zoom out to the weekly, right against that $100 level. Might be good. I might go buy some stocks after this, guys. I'm starting to see some clean setups. We need follow through, but can manage risk. Tesla, right below 280. I don't see a reason to be in. It's just messy, guys. Like, this is just messy below this level, right? Got really oversold. What, 60%, 50% drawdown. Don't see a reason to be in it. And that's the Mag-7. So let me get back. That's the Mag-7, guys. So let's take a look. A couple charts I like, and then I'll get you guys. I'll get out of here. Get out of here. All right. As we talked about, right, take a deep breath, right? We need to see that follow through, like we talked about, right? A couple charts just keep an eye on. AUR, the ticker. AUR, keep an eye on it, right? You have Pittsburgh-based innovation company. We want to see follow through here, but it's holding up pretty well relative to a lot of these pullbacks. So look at AUR, still a nice looking base. Maybe we start to see follow through in this self-driving company. Who knows if the Steelers actually get Aaron Rodgers, but that would be cool. Bros, similar, right? Pulling back into support here. Another name I like. Don't own it at the moment, but names I'm looking at, see if we get some follow through to the upside. Instacart, right? Maple Bear, right? This $40 level in Instacart, Maple Bear, right? Similar pattern to what we're seeing, this pullback. We need this follow through. It's the most common pattern in the market right now. So, guys, I hope you can see some of this stuff that I'm sharing. See that we went through a lot of charts, but they all have similar meaning, right? Strong pullback. Now we need some follow through because the market tends to move together. So everyone be shouting out follow through this weekend because that's what we need in the market. Manage risk, right? Keep mistakes small and enjoy the weekend, guys. So that's it from me this week. Thank you to the chat. Thank you to StockTwits. Shout out to Howard for putting some charts in the chat. I'll be back next week. You guys can check out my content, right? So I'm at Hostile Charts on StockTwits, right? I'm also at Hostile Charts on Twitter. Follow me in both places. And also, I have a Beehive that I write. Shout out to Beehive. I write that every Saturday morning. So that'll come into your inbox. So Beehive, it's also Hostile Charts. And then also working on a Tuesday, Thursday letter called Thompson's 2 Cents, which if you sign up for Beehive, you'll also get that. But anyways, guys, have a great weekend. Shout out to the market. Shout out to the chat. Peace.